I'm going to start here by talking about how do we account for our Paycheck Protection Program loan funds that we've received. I'm sure it's an exciting topic here everybody's waiting for. As most of you are aware, and probably most of you listening out there have received this money. This was designed to provide direct incentives for small businesses to keep their workers on the payroll. And the program was designed that it'll be forgiven if all employee retention criteria are met and funds are expended for their eligible purposes. Currently, our clients are currently in the forgiveness phase. There was an article in the Wall Street Journal, I think it might have come out late yesterday on the electronic edition, that the Treasury, they've not approved any forgiveness of the PPP money yet, but they're going to start forgiving it. They said they have about 96,000 applications that have been submitted. They're going to start forgiving that either later this week, which we're at the later part, or early next week. And the legislation out there currently on both sides they want to have it, if you have less than 150,000, to just sign a certification that you've used it. Those over 2 million, though, are supposed to be held to higher standards as far as auditing and checking the information. But it's hard to say what's going to happen with those legislation being held up the way it is, and who knows. So it might be we're going to have to just start here sending in whatever we have, not knowing when things are going to get back on the track in DC here. The other thing with this program, too, is you're aware it's changed several times, and keeping up with their criteria has been quite a challenge. Now, at this stage, we're going to just want to assume that we're going to talk for how it should have been recorded when you got it and what the basis for this would have been here. The first question, how should a non-government entity account for a forgivable loan received under the SBA? And they broke it down in the guidance that was issued back in June into two options: for-profit businesses and not-for-profits. For-profit businesses had two options. They can count for it loan as a financial liability and accrue interest on the liability at the rate specified in the loan. So it's created as debt, pretty straightforward. For-profit businesses were given the option to analogize this to International Accounting Standards number 20, which allows under certain situations you can account for those that as a grant. I currently do not know of anyone adopting this treatment. I was on a webinar last week, and the presenters there said they're actually discouraging people from even going down the IAS 20 pass. But since we have a not-for-profit conference audience here, not-for-profits now have two options as well. You can account for it as a financial liability, accrue interest. So the one option is creating it as debt. The other option out there is to treat it according to the guidance for accounting for contributions received and contributions made. So that option is out there, particularly if you feel it's going to end up being forgiven and it's in substance was really a grant to you from the government. As far as examples of accounting, I have put together examples giving several different scenarios here for you to take a look at. One was when you're receiving it. If you're a not-for-profit, we received $100,000 here. The first item is if we're recording it as a loan, simply debit cash, credit the loan. If we believe we're going to treat it as a grant, we're going to debit the cash and credit the refundable advance here for the organization. I have clients out there. It's actually, two clients who've actually taken that decision to the board to see if they want to treat it as a grant, see if they want to treat it as a loan. What I'm seeing is most are treating it as a forgivable grant, but I would say there's probably about 20% that the boards or financial chiefs have said, no, we're going to treat it as a loan, and we're not going to write it off until it becomes a loan. So you have two options. Neither is right. It really comes back to what the organization would prefer and what they believe at this point in time. Okay. Let's say here we have Company A's fiscal year end is June 30. The official forgiveness from their financial institution has not been obtained. However, management believes they're eligible for 100% forgiveness at June 30, and I would recommend just going through the application that's out there, seeing how you come up with that, see if it's forgivable or not, or what percent to come up with that amount. But in this case, if we're treating it as a loan, we have no entry since they've not received the formal forgiveness. If we're treating it as a forgivable grant, yes, they could recognize that whole amount in income as of June 30, take it all in. One argument in favor would be that that probably more closely represents the expenses that you're using to claim that revenue. So you could, one argument for using it is it better matches it. The other argument for keeping it as a loan as well, we haven't got the official, so we don't know. We're not willing to take that chance, so we're going to follow the old FASB 5 and contingencies and continue to show it there as a loan. Another example I have here is assume this case here that they're not eligible for forgiveness for the whole amount, only 50%. So they say, we've used $50,000 on payroll at this time by June 30, and we believe that we're eligible for forgiveness. There again, on the loan, no entry is made. If it's a forgivable grant, you could bring half of that money into income as of June 30 here for the organization. The next example I have, they've received the official forgiveness of the income. However, they were eligible at June 30 and they had taken the approach at that one scenario here. If they've taken the approach that's forgivable, they would have no entry to make. They've already taken it into income in the prior year. But if they've taken the loan approach, this is the year they would take it into income, would be in their fiscal year 2021, not 2020. So as you can see here, some of this has to do too with the timing of when you're going to be recognizing this as income, either as it's being used along that time or hold till it's officially forgiving and then recognize it. There's on a calendar year out there. Hopefully you'll be in the boat. You don't have to worry. You'll have it officially forgiven come year December 31st. But my fiscal year end June 30s and up through here, they're the ones where this is becoming an issue, deciding what to do. The other example is if we were qualified for $50,000, there again, if it was a loan, we didn't take anything. So we're going to bring it all into income here in this time period in 2020 or 2021. If we had recognized $50,000 as income as of June 30, we're just going to bring the other half in the year 2021 whenever they receive their official forgiveness at this point in time. So very quick, the accounting came out, I thought was pretty straightforward how they came out, but you do have two options out there. So be aware of that. So thank you.